In exercise 4-2 on page 163 of your text, we're going to be preparing a worksheet for Reagan Financial Services for the year ended December 31st, 20x2. Keep in mind the purpose of the worksheet is to help us complete our adjustments more efficiently and to help us to complete our financial statements. The first thing you want to do is enter the heading on your worksheet. It's the name of the company, worksheet, and for the year ended December 31st, 20x2. Now the heading on the worksheet is not as important as the headings on the financial statements because this is an internal document. It will not be seen by the public like the financial statements will. The next thing you want to do is enter the names of the accounts here under account title. Those are given in your text. And then you want to enter the account balances, and those are given as well. I added up the debits and added up the credits of the trial balance to make sure that my debits equaled credits. The next thing we want to do is enter the adjustments. In A, it says supplies on hand is $30. If we look at our account balance up here, we have $40 in our account. According to the passage, we only have 30 on hand. So if we started with 40 and we now have 30, that means we've used up $10 in supplies. So I'm going to credit my supplies account to decrease it by $10, and I'm going to debit supplies expense to show that we have used up $10 in supplies. In B, insurance expired is $10. Now remember, we're looking for the amount used up, and if $10 in insurance has expired, that means that we've used up $10 in insurance because expired means that you've used that up. So I'm going to credit the prepaid insurance and debit insurance expense for the $10. In C, we've got depreciation of equipment, $10. So they've calculated the depreciation for us. So all we have to do is enter it with a debit to depreciation expense and a credit to accumulated depreciation. Remember, never debit or credit this equipment account with your adjustments. We want it to remain at its cost of $100 here. In D, it says unpaid salaries is $10. That means we owe $10. So salaries payable will go up with a credit of $10, and salaries expense will increase with a debit of $10. So now that we have our adjustments, we want to total each adjustment to make sure that debits equal credits before we go on to the next column. Our next column is the adjusted trial balance. So we started with our trial balance, we entered adjustments, and now we're coming to our adjusted trial balance. So this is just your trial balance with the new balances after adjustments. So cash was not adjusted, it had a $60 debit, so we're going to bring over our $60 debit. It still has that balance. Accounts receivable has no adjustment, so it will still have a $30 debit. Supplies has a $40 debit and a $10 credit. It's just like your general ledger. If you have a debit and a credit, you subtract and it remains on the debit side. Remember, we put the balance on the side with the higher number, which happens to be the debit. Here, prepaid insurance has a debit of 30 and a credit of 10, so we subtract. So the balance in prepaid insurance is 20. It stays on the debit side like all assets do. There was no adjustment to equipment, so it remains a $100 debit. Accumulated depreciation had a credit of $20. We gave it another credit of 10. A credit and a credit you add. So accumulated depreciation has a credit balance of $30. Accounts payable was not adjusted. It had a credit of 60, so it will remain with a credit of 60. Salaries payable had no balance at all. We gave it a $10 credit, so now it has a $10 credit. Reagan Capital had a $100 credit with no adjustment, so it remains with the $100 credit. Drawing is brought over as well. It has a 30 debit, so we'll give it a $30 debit. Fees was not adjusted. It has a 161 credit, so that's where we'll enter that balance. Salaries expense had $11 balance. We gave it another debit of $10, a debit and a debit. You add and you get a debit. Rent expense was not adjusted, so we'll bring that right over. Supplies expense had no balance. We gave it a $10 debit, so it has a $10 debit balance. And the same with insurance and depreciation. Okay, so we want to add up our debits. And we get $361. Okay, if we add up our credits, we also get $361. So we know that our adjusted trial balance is still in balance. Once we get our new balances in the adjusted trial balance, it's time to transfer our accounts over to the income statement and the balance sheet. Okay, first we'll transfer the accounts that belong on the income statement over to the income statement. You know that revenues and expenses are the only accounts listed on the income statement. So if I find my revenue account and come over, from revenues down are the accounts that are going on the income statement. So we have our fees earned has a credit of 161, so it comes over with a credit of 161. And then we'll bring over all our expense account balances: salaries, rent, supplies, insurance, and depreciation. Okay, that means all other accounts are moved over to the balance sheet. So if you know the accounts that belong on the income statement, then you know everything else goes over to the balance sheet. So cash, accounts receivable, prepaid insurance, equipment, let's see, 60, that's 40. 20, and the equipment's 100. Okay, remember you're bringing over the new balances, not anything left of the adjusted trial balance, just the adjusted trial balance figures. These are your good figures. Okay, and then accumulated depreciation gets a credit along with accounts payable and salaries payable, capital, and then your drawing comes over. Okay, so now that we have all the accounts brought over to the appropriate financial statement, we're going to bring the balances down. So the credit side of the income statement equals 161. The debit side, if you add all these numbers, equals 91. On the balance sheet, all the debits equal 270. And then all the credits equal 200. Notice these do not balance. Typically your revenues and expenses do not equal. So what we're going to do here is subtract the debits and the credits here. So if you take your revenues and subtract out your total expenses, you'll get $70. And then over here, if you take your total debits and subtract your credits here with your balance sheet, you'll get $70. Then we want to add these two figures together to get a grand total of 161. We'll bring this 161 down and bring the 270 down and add these two numbers and get 270. Okay, this shows us that our worksheet is in balance. This $70 figure here is a very important figure. It's telling us that that is our net income. So I'm going to come over here and label that as my net income. If this difference of 70 does not equal this difference, then we know we have a math error that we have to go back and find.